In this video, I'm going to recap a trade I posted in the Income Navigator Trader chat room. This was a late date 0Dte call debit spread that turned into a risk-free call spread that made money regardless whether the underlying went up, went down, or if it did nothing or went nowhere. I hope you find this information useful and maybe you can implement this style of risk management in your own trading. If you find this useful, please subscribe to the channel, like this video, and share it with someone you think could benefit from it. With that said, let's dive right in. For this trade, I used same-day expiration options in the S&P 500 Index, ticker symbol SPX. With SPX trading somewhere around 39.75, this trade started as a simple 39.70, 39.80 call debit spread for $4.80 debit. My risk in this trade was $2,880 for a total of 6 contracts. Now, as the market started to break above day's highs, I went ahead and I closed 3 of the 6 spreads for $5.90 each, collecting $1,770. Now this left me with 3 spreads and risk of $1,110. Then as the market started to pull back, I went ahead and I rolled the long 39.70 call up to 39.75 strike for $3.30 credit for each. I collected $990 in credit, and this reduced my risk from $1,110 to $120. Now, this adjustment also reduced my upside profit potential from $1,890 to $1,380. And that's the price one has to pay for being able to remove risk from any trade. Then, as the market pulled back towards the highs of the day, what I did was I closed 2 of the 3 remaining spreads for $2.75 each. I collected an additional $550 credit. Now my risk in this trade went from $120 to 0. Actually, I was left with a net credit in the remaining 1 call spread. So before this last adjustment, I had a debit of $120, and by collecting $550, I was left with a net credit of $430. So now I have 1 5-point wide call spread at a net credit of $4.30 or $430. This means that if SPX expires above 39.80, this spread could potentially be worth $500 plus the $430 credit that I collected making the last 3 adjustments. Now, what if the S&P falls below 39.75 at the close? My long and my short option will expire worthless, and I will get to keep just a $430 credit. It's a win-win, right? So S&P expired at 3979.87. So what was the value of my remaining 39.75, 39.80 call spread? The long 39.75 call is $4.87 in the money, which makes it worth $487. The short 39.80 call expired worthless. So my long option is worth $487 plus the $430 credit that I collected making the adjustments. This trade has a profit of $917. Now you can look at it like this. The profit was $917. My initial risk or my outlay to put this trade on was $2,880. You take 917 over 2880, that's a 30% return on risk in less than 2 hours on the trading day. If you enjoyed this video, please consider subscribing to the channel, liking this video, and leave a comment if you do something similar in your trading. Until next time, take care of the risk while the profits take care of themselves.